Now, when you prepare a bank reconciliation statement, many a times you may be given the credit balance of the bank passbook. So you have balance as per passbook. Please note that this balance as per passbook is normally a credit balance, and if it is said that you have a favorable balance as per the passbook, what it means is you have a credit balance. This is because in the books of the bank, passbook is basically prepared by the bank, and in the books of the bank, the person who's deposited money is a creditor, right? And therefore this balance is a credit balance. Now suppose you are given this balance and then you are given various items. Let's take two of them. Okay, you have to ascertain what is the impact of these, whether the balance should be added to the passbook or it should be reduced from the passbook. Again, the procedure remains the same. Let's say you have a passbook in which you have balance of 10,000. Now I tell you that there was a check issued, or maybe instead of issued, let's first take check deposited into bank, not credited, and this is for rupees 500. Now ideally, if I tell you that, let's say if this balance is 10,000 in a normal world, the balance as per the cash book should also be 10,000, right? But you are told that there is one check deposited into bank which has not been credited. So when we have check like this, what is the entry that you pass? In the books of the company, cash book is prepared, okay, and the company will pass an entry, cash or bank account debit to, let's say X is the party from whom this check is received, 500. So the balance will be how much? 10,500 in the cash book, but 10,000 in the passbook, right? Now your starting point is the balance as per the passbook, right? Because you're given this balance. In such a case, the adjustment that you have to make, whether increase or decrease, has to be made to this balance. As I told you earlier also, this balance should ideally tie up with this, but the adjustment which has to be done in this case is to this balance, because this is the starting point we have. So what do I do if I have to increase 10,000 to 10,500? I will add 500 here, right? So did I do some rocket science? Obviously no. It was just a single simple entry. Now let's see the second case which I was pointing out earlier. Let me just remove this here. Interest credited by bank, 100 rupees. Now suppose I tell you that your starting balance is 10,000 as per the passbook. Then ideally for the bank book also it should be 10,000, right? But let's not get into the balance as per the bank, the cash book. Now you are told that the bank had credited interest to the extent of rupees 100. What does this mean? This means that basically the bank increased this balance by 100 rupees, right? Whereas because this entry has not been passed into the cash book, that balance would have remained lesser by 100 rupees. Or in other words, the bank book would be showing a balance of 9,900. Why? Because they haven't increased this amount by 100, right? So if I have to take this balance down to 9,900, what will I do? I will reduce this 100, right? So that's how basically you make the adjustments as you deal with balance as per the passbook.